This man, he left school during his teenage years to start working as a machinist, helping his boss to operate machineries involved in the manufacturing of precision metal parts. This man, he established his first partnership venture just after 7 years working for other people, involving in the provision of lathe, milling, grinding and metalworks. 10 years later, this man formed his very own company with his wife to help his customers fabricate sheet metals. And later on, this man expanded his business activities to do CNC machining and mechanical assembly services to add value to his customers. Hi, I'm Frankie. Welcome back to my fuck show. This is a story of a man with a humble beginning and soon making a foray into the ace market of Bursa, Malaysia. He is the founder of SFP Tech Holdings Berhad, Mr. Keoh Beng Huat. And today, I want to talk about this new IPO that is slated to debut in June 2022.
This 1st of July, we'll be holding a workshop on dividend investing.
In this 3-hour workshop, you will learn 4 things.
How dividend works to your advantage,
How to identify a good dividend stock using the logic investing framework,
how to build an investment portfolio that generates passive income for you,
and finally, how to confidently execute your investment strategy with a strong foundation.
Joining this workshop, you're guaranteed to have the confidence and knowledge of picking a good dividend stock to invest in by the end of it. Seats are limited.
So register now with this link or by scanning the QR code shown on the screen. The story happened in Penang, and yes, you guessed it right. Penang, being the Silicon Valley of the East, SFP Tech Holdings is a business closely related to the tech sector. This company mainly fabricated sheet metal, CNC machining and trading of spare parts. It also provided services such as mechanical assembly and automation equipment solutions to both local and multinational companies. When Mr. Keoh started his company with his wife, they operated from a small rented factory in Bukit Minyak. They had no time to waste because being a small company operating alongside big multinational companies in Penang, the competition is huge and intense. Moreover, with the limited resources the husband and wife duo had, a situation of no business plus having to pay rent for the factory could kill the business very quickly. But with the determination and hard work that Mr. Keoh and his team put in, the company grew exponentially throughout the years, adding more and more services to add value to its customers, to make sure that the customers like what they do and continue using their services for the long term. It's easier said than done. In order to remain competitive and please its customers' ever-growing demand in the semiconductor industry, continuous investment in advanced machinery and equipment is key. Investment needs money, lots of money. So when the company decided to finally own its own factory with a floor space of more than double its rented factory, everyone knew that this new player on the block had gotten serious. In fact, the acquisition happened just 4 years after the company was incorporated. Many companies that didn't have a clear vision and execution plans would have disappeared by then. If that didn't sound impressive enough, 3 years after that, a second manufacturing plant was built to house more machines and support its sub-modular mechanical and full assembly operations. A year later, they bought another piece of land, earmarked for the construction of its third manufacturing plant. If it wasn't for the MCO, the third plant would have been completed today and start generating more revenue for the company. Today, SFP Tech is listing its business on the ACE market to raise 62 million ringgit from equity investors. According to its prospectus, the big bulk will be used to fund the construction and purchasing of new machinery and equipment for that third factory. I know these sound a little bit cliche. I mean, most companies that go IPO would of course share big dreams with investors about their future business. And therefore, the money will be spent on assets to bring the company to achieve that dream. Nobody is going to say they are raising funds to put in FD. That is just... never mind. The point I want to make is that SFP Tech had actually self-funded the construction of the third manufacturing plant through a bank loan. This means the company had already taken a huge chunk of the risk off the table. At least, the factory has already been built and not just a plan. By having a physical asset in place, it is easy to invite potential customers to come over to conduct audits on the site and equipment. If the potential customers like the new plan, Bingo! New orders could be on the way, man! If you are a seasoned investor, especially on the subscription of IPO shares, I'm sure you came across instances whereby the original owners of a company would sell part of their existing shareholding to the market. Which is fair because after decades of hard work, I'm sure they will want to cash out some money to reward themselves, whilst remaining active in the business to drive the company forward. In the case of SFP Tech, this caught my attention. Mr. Keoh is not selling a single share in the company. In fact, he is diluting his ownership away to the market with the hope that the money that the company raised could fulfill SFP Tech's business expansion plans. Every single cent that SFP Tech raises will go into either plant tree, the machine and equipment, or be used to pay off borrowing so that the company could save on interest expenses. I hope the two examples given have helped you to understand the management's commitment to the business. There's still one problem. How is the company doing financially? Personally, I like to start by breaking down its revenue to get a gauge of where the money is coming from. The bulk of SFP Tech's revenue comes from Malaysia, and that number grew from just 6.9 million ringgit in FY18 all the way to close to 40 million ringgit in FY21. That is more than 470% growth in a span of 3 years. But wait a minute, SFP Tech is a Penang tech related company. Penang. Yes, it's the Silicon Valley of the East, but it is a small island. So no matter how great it is, the number of companies operating there is limited. So does that mean that SFP Tech's customers are very concentrated to a few customers only? If that's true, learning from past experiences of what happened to other EMS players in Malaysia, it does seem like a risk that investors need to pay attention to. Hopefully, with Plant 3 running, it is able to attract more customers from overseas to dilute that concentration risk. Next is the profitability of the group. I would argue that doing business is not easy, and therefore it is important to price a product or service as competitively as possible in order not to lose a customer. Just look at these numbers. It must have such good control on costs in order to produce this kind of profit. Kudos to the management team, but now that this information is made publicly available, I can't stop wondering if the customers would come and ask for a discount and therefore affect their profit margin in the future. If it's me, bring it on, man! I don't mind lowering the price and hurting the margin a little bit if that decision is able to squeeze uncompetitive rivals out of business. Or maybe that's part of the plan of doing this IPO in the first place. All being said, tough times create great men. Great men create good times. We could only imagine what Mr. Keoh and his wife went through all those years in that tiny rented factory in Bukit Minyak. But today, SFP Tech is presenting a well-established business to Bursa Malaysia, a new investment option for investors like you and me to continue an adventurous business journey with him. Having said that, this video is by all means not investment advice. You should seek professional opinion and conduct your own research before making your decision. It's your money, your own responsibility. That's all we have for today. #fuck.